Here's a welcome aboard. Happy Tuesday to you guys. May 24th, 2011. Joseph James here. Sideways Markets, schooloftrade.com. Welcome to your live today recap. Another good day in the room. We had to earn it today, though. Boy, second day in a row, a little bit light and sloppy here today. Today had a much different look at it, though. If you recall, yesterday we waited 2 hours for our first trade, and we ended up getting a lot of moves at the end of the morning. Well, this morning we had some news out of Goldman Sachs overnight, and then early this morning out of the UK this morning, Goldman Sachs basically telling their clients, hey, heads up, commodity prices might rise. And we were laughing about it this morning because didn't we just hear them 3 weeks ago say how it was falling? So, of course, we realized Goldman Sachs playing the yo-yo game, right? And we were kind of joking about it this morning, saying this must be the current pump and dump scheme. Ages ago, 100 years ago, pump and dump schemes are very common. As you can see, they're happening again today. Except today, a bank like Goldman Sachs can tell all of their clients, and boy, can they move these markets around. Then we got some news out of the UK this morning of the same type of thing, right? Some sort of insider trading, manipulation of metal prices. So we open up our news this morning, and much different than Monday morning, what did we see? We had a pretty active market right away. And we knew the news from Goldman Sachs would probably have some weight to it. So we immediately began looking at crude and gold. We immediately began to think to ourselves, all right, what are they trying to tell us right now? Rising prices, look at the chart. And that's exactly what we saw. We saw rising crude, we saw falling dollar. Commodities on the rise. Now, it was tough to tell which came first, the chicken or the egg, right? Was it the dollar that dropped, which caused the crude to rise, or was it the comments overnight out of Goldman Sachs that caused commodities to rise, which of course meant bad news for the dollar, which brought the dollar down? Tough to tell which happened first. Look at your chart. I'm sure you can find out. We really don't care that much, to be honest with you. But this morning, one thing we saw was commodities rising, dollar dropping. We saw two things on crude. First, a price wedge, and we were right in the middle. Being right in the middle of the price wedge, usually you're going to want to stay away from that, right? Avoid the middle. But then we got another clue, and that was the bull channel, right? The bull channel, 13 range chart, nice big old bull channel. And that bull channel, it was kind of funny because I didn't see the bull channel until about an hour into the day, but we had still traded right along with it because, again, the news out of Goldman Sachs had me thinking to myself, let's buy pullbacks as prices rising, expecting people would, of course, take that news overnight to heart and probably start trading long as well. So, dollar, what happened to dollar? Bear channel. Rising crude, bull channel, dollar 13 range, bear channel. This is looking to be a perfect storm. Doesn't get much easier than this. A clear, well-defined uptrend on the crude. A clear, well-defined uptrend on the gold as well. Gold was a little bit different though. Gold very sloppy today. And then we had a dollar bear channel, a clear down channel, clear downtrend on the dollar. This makes for a very easy trading plan. We already had the news out of Goldman Sachs. We already heard about the UK price manipulation on metals. We had the dollar dropping and the bull channel. That's an easy plan. Buy pullbacks on crude. If we keep seeing higher highs, just keep buying those pullbacks. Now, we planned on doing them both on gold and on crude, but gold was nothing but sloppy. And most likely because the dollar was actually spent most of its morning chopping around that previous high of day. We'll show you guys more of that in a moment here. But basically, gold, pretty quiet all day. Tried twice on gold to get into a wave 21, but it just kind of sputtered out and curled over on me. So, easy plan. Buy pullbacks on crude and gold with new higher highs. That's the key. All right, I got to see higher highs, then I buy pullbacks. At the same time, I'm watching that dollar. The dollar now is going to keep dropping. If I keep seeing lower lows in the dollar, I'm going to keep buying pullbacks on the gold and crude. We also said if we get up to the highs or the lows of the wedge, I'm going to buy the lows, sell the highs of the wedge. And then even more importantly, we said right below the highs is the previous high of day. If we're able to break below that 99.12, I want to sell the previous high of day. So the plan of attack was quite easy. Buy pullbacks if we keep rising. If we happen to curl over and reverse, be on the lookout to sell the highs of the range, which we did. And then late this morning, our patience paid off. Everybody was with me this morning. 12 o'clock, what happened? We finally broke below the previous high of day. So we were rising, buying pullbacks. All of a sudden now the dollar stops falling. It goes sideways. Remember this morning? Dollar goes sideways, we chop sideways on crude, right? Dollar jumps up, we then sell those highs on crude. 12 o'clock rolls around, we're finally down to the previous high of day from yesterday. We sell below the previous high of day yesterday for a 55 tick winner. Huge end of the morning. This is the third time now this crude oil has tried to push above 100. The first one was way back when, second one was right here, and then third one right here. Now the key here was it blows right through that trigger line, comes right back down. I'm ready to sell those highs, take my profit off at those lows. Nice big winner here. One of the biggest winning trades of the day today. 11.26, 9.951, 10.21, 32 ticks, guys. And again, very simple here. 34 range failed. Can't see on this one obviously, but we have a 34 range wave that failed there. But most importantly though, that was the third strike there, trying to test those hundreds, trying to break those hundreds, and it failed. Now here we are at the bottom of this channel. Here I am. There's my channel lows. I took the trade short, profit off at the lows. Now at the lows of the channel, you know what I'm doing? I'm going to buy those lows. So I immediately find a 4 range chart. I can jump in right away. Got in too early. 11.27, I'm in way too early. 9.947. I learned my lesson on this one though. I learned the 21 range trigger line, which is right about here. I had to get above that first. So I learned a valuable lesson. 11.27, got in way too early. +6, -4, buy those lows of the channel. I make 40 bucks. I'm at my 40 ticks, my 4 ticks, right? Pay off some commissions to the broker. With that trade though, I quickly saw, okay, I'm not going to be able to get greedy here. I'm not going to be too aggressive. Let's wait till we get above that swing high, get above the 13 trigger, get above the 21 trigger, and we said, all right, this time around, if I can get myself above 60 here, then I can get going long. 60 was overhead resistance. So a couple minutes go by. As you can see here, it chops around a little bit, and finally, bam, it breaks back up off the lows of the channel. Now, we got a little bit of a winner here, but not much at all. You can see 11.30, 2-step long. I get my +6 times 2 is 12. Knowing that this price action was sloppy, I quickly tightened my stop up. That way, when it failed, as you can see it did, we didn't get taken out for a loss. So 11.30, we're trying to buy those lows. As you can see, my first swing was a strikeout, right? The second swing, +6 scratch. So we made some money on this stuff. But as you can see, though, this thing quickly gives us some feedback. It's failing. We try to buy these lows, nothing happens, and we break new lower lows. Now, when I break new lower lows over here, I can start selling short now if I want to, but I've got a couple things to worry about. I've got the BMT support. I have the previous high of day support. So my exact words were, you can look to get in early right now, but I'm going to wait to really confirm these sellers are here and get below that previous high of day. Sure enough, we break below the previous high of day. You can't see it here, but on the 4 range chart, we sold a retracement, took it off all the way down here at the 60s, and the 60s was the BMT, right, from my 21 range chart. At 12.04, right, 98.90, 2 times 7 is 14, plus 11 is 25, plus 30 is 55 ticks. Our biggest trade of the day came at the end of our morning, and we had waited patiently for it all day today.